Hi, everyone, and welcome to today's edition of the WSBA Crypto Roundup for August 16th, 2024. I'm here with my amazing co-hosts, Quaranta, excuse me, Ron, and David Brill. One of these years I will get that correct. Um, and we're excited to be here today. There's a lot to discuss, but before we begin, we just wanted to give our usual disclaimers, which is that nothing that we say here is intended to be and is not legal advice, investment advice, accounting advice, tax advice, or any kind of advice, really. Just our thoughts, which we may still be formulating. And also that nothing we say here is intended to represent the views of anyone but ourselves. So it's not intended to represent the views of the Wall Street Blockchain Alliance, any of our employers, any of our clients, etc. So shall we begin? Off to the races. How are you guys?
Doing well, Josh. Good to see you and David. I will point out that David is looking for steakhouse advice for everyone in the audience. So that's one exception to everything we're talking about, Josh. But it's good to see you and David. I cannot believe we're approaching the end of the summer.
I think this is the fastest one that I recall. So what about you, David?
Me too. It's been really fast and furious, and it's just been a fascinating summer. And this week's been a slower week as things go, and there's still a lot going on. So I'm very happy. Josh, it's Friday.
Can I ask? David looks even tanner than usual. Like he's got this amazing kind of glow to him. How do you do it, David?
Florida living, has its benefits, and one of them is, you walk the dog, you're outside, you sit on the balcony, you're just getting some sun. So, but it's certainly not.
Go ahead.
I'm not glowing because of the Bitcoin price this week, though. That's for sure.
So, Josh, if I could, that gets me to the first thing I was hoping to talk about. And there's a lot to talk about. We definitely have to talk about Ripple and the other stuff, Josh. But David, I have economic whiplash, and I'm hoping you and Josh can help me. Last week, markets cratered across the board. It's not a soft landing. It's a recession. Things are going to go haywire. We need emergency rate cuts. This week, entirely 180, completely different story. Markets up, but Bitcoin, Ether, not up. What the heck?
We've become so data dependent that every move seems to just change the sentiment dramatically.
Yeah.
And I think the underlying thing that really points to is that I think people are kind of unsure. Like on one hand, people think, I would say on the lower income levels, people are in distress. Like we're seeing these 90-day delinquencies, we're seeing car repossessions, so on. But then in the data, we're seeing, well, there are less jobs being lost and people are still buying. And I guess there was one indicator where, retail sales jumped by a full % in the last, month, year over year. So I think people are looking at different signals, but I think ultimately the picture is that there's this uncertainty, but overwhelming desire to have rate cuts. So whatever path people can rationalize to get to rate cuts is where they want to end up. And they'll pick and choose which data points they like along the way.
What do you guys think about the inflation numbers?
So I'm going to go right to David's. Yeah, well, look, I'm going to go right to David's. Like a lot of the data for everyone in the audience is, seems to be that inflation is abating. The Fed has done its job. I'm going to say something that's probably going to be a bit more controversial than I mean it to be. David, I think you might agree with this. I think the data doesn't tell the entirety of the story, particularly the data that the Fed looks at. I don't think, look, I think we're on a good trend, but I think some of the inflation everyone's talking about abating is not the stuff that hits people's pocketbooks, is not the stuff, we're still looking at data that omits food and fuel. And guess, what the biggest data points in price sensitivity is for a lot of the country is food and fuel. And I got Greg Murphy chiming in about Josh bringing the heat already.
I don't know if you can tell that I'm sweating.
It's warm. It's warm under the respective studio lights. But David, tell me if I'm wrong there. I just feel like there's the data that the news talks about and there's the data that the people feel.
Yeah. Couldn't agree more. And it's, something that we've said over a number of these podcasts. And then I think the other thing is, inflation's abating, but it's abating at a level that's, where we're probably 20 to 30% higher than we were in 2020. So yeah, we may be abating, but I think if we kept going at the pace we were, we'd really be pricing out a whole segment of the population, and we may be pricing out a segment of the population already. So no, I totally agree, Ron. And I think that we are going to get a rate cut in September. But I do think fundamentally there's a real fissure that's growing between lower and middle income earners and then higher income earners.
And you also see it, David, in I think this week was retail sales we talked about, which were relatively speaking robust. But if the credit card data is telling the other side of that story, the retail sales are based on credit sales, which is a bit disconcerting. Same thing with jobs. And again, I don't, for the audience, if you have questions, please chime in the chat. But when we look at the jobs data, over 60% of jobs data are government related or government adjacent jobs, including in healthcare or government services. That's not broad industry uptake in jobs.
Yeah, I would say that you're really not seeing a lot of white collar hiring on scale.
So to that point, David, is crypto a better reflection of the macroeconomy than, the NASDAQ, the Dow?
So someday, but right now we have these overhang, and I'll call it like a boogeyman overhang that we have, that sort of keeping the price down a little bit because there's extraneous supply that's coming into the market. So you have the Bitcoin from Mt. Gox is being returned to creditors. There's Genesis tokens and Bitcoin that's being returned. There's all of this sort of pent up demand for some of these releases of Bitcoin that people own that they're finally getting access to and are probably selling some of it. So if we were in a steady state with this extra supply, it could be, but because we have this extra supply, because of these sort of one of a kind of events, I don't think it is.
How long, Josh, will it take to clear the supply, though? I guess, does anyone have a picture of that?
It's a good question. It's also totally not clear, how much of the supply it is, but also the perception. Every time you hear, old Ethereum or old Bitcoin moves to a wallet, an exchange wallet, the market reacts poorly to that because they think, oh, this is really smart money that wants to sell. But in some instances, as people, you have a huge profit. You should be smart in some instances and take a profit when you can, especially if the profit is like a 10 or 100x. So I think there's some of that, but I think there may be some. I think we're in an accumulation phase. I think that people who want to have bigger positions in tokens are doing that right now. And they're happy to see that the price isn't moving, so they're accumulating in this phase. So that's how I've been thinking about it.
Got it.
What do you think, Josh? Are you?
We want the macro conversation.
Yeah, are you filling your Ethereum bags up here?
I mean, I'll never tell. But what I would say is, I think I saw this. If I did not, if I'm mistaken, just tell me. But I thought that I saw somewhere that just very recently, one of Japan's pension funds, I think it was Japan, had purchased a large number of MicroStrategy shares, which I think that's pretty interesting. So even as we're watching the price with respect to, say, Bitcoin, if we look more broadly, as you were saying, about who's buying what, I mean, that would seem to signal a view that, Sailor's strategy is one that pension funds may be interested in.
And Japanese pension funds aren't really known for their wild betting sprees of risky investments, I would probably argue.
That's what I would think, but now I'm like second guessing myself about whether it was Japan. So just, fact check me, please.
To that point, go ahead. I'm sorry, David.
No, I was just going to say one other thing that's interesting is Russia has legalized and use of crypto as a payment mechanism. So I think that's also bullish. Though I wonder if that's kind of gone on behind the scenes and just wasn't sort of official. But now it has the official stamp of approval on things. That should be a bullish indicator too.
I don't want to make this political, and Greg Murphy agrees with you, David, but how bullish is it for Russia to be, giving thumbs up to Bitcoin mining, for example, the crypto space writ large, given the current, foreign policy issues that are going on, is what I'll say.
Well, you have to remember, there are sanctions against them, but they have a different point of view in the world about what's going on, and they see it as another means of transacting business and maybe alleviating some of the sanctions. So, just trying to look at it holistically, it is it is positive. It may not seem as positive under the current set of circumstances, but broadly speaking, it is positive.
I mean, we don't have to look far. We don't have to go overseas for this conversation, Josh and David, either. I think BlackRock, is it BlackRock that owns 400 million in ETH ETFs, spot ETFs that I see? Did anyone see that article?
I didn't see that, but it's certainly possible.
I mean, that's...
Ron, I think an underreported story is like the performance of ETH here.
True.
I think a lot of people would have thought that we'd see sort of some momentum in Ethereum after the launch. But the same thing we saw with the Bitcoin ETF with the selling of Grayscale, we're seeing with Ether with the selling of Grayscale. So I think at some point when that selling abates, I think we're really going to start seeing some acceleration with Ethereum.
Yeah.
And also with respect to, this just actually made me think of it because we were talking about sanctions and Russia. Not that we want to tie these two things together with Bitcoin mining, but if you guys saw the report that came out from the New York Fed about Tornado Cash and sort of the takeaways from the results of Tornado Cash, I have to say, Lee Schneider and Emma Channing were instrumental in bringing this to my attention. But basically, that study said essentially that by volume and value, like immediately after the sanctions were announced, it dropped. However, the anonymity pools, which basically determine how anonymous transactions can become, right? They were able to remain large. And so that's something also that Blockworks has reported on. But I think it's an interesting thing that some are saying that actually Tornado Cash, despite sanctions, remains effective for privacy protection.
Interesting. David,
again, nothing. It just so happened that we mentioned sanctions in the context of Russia.
And we're not advocating any of those particular providers. No. Josh, David, if I could, David, I wanted to ask you something. I've been thinking a lot about the VIX lately. So if you remember last week, the VIX was, the week before last, I think it was like 16 or something. So for those in the audience who may or may not know, the VIX is the CBOE Chicago, the volatility index that's reflective of, there's more math to it than I'm giving it credit for, but reflective of the risk profile out in the broad marketplace and how difficult market circumstances might be broadly. There's more math to it, Josh. I'm really sorry. But generally when it's like 15, 16, things are kind of percolating along. And I think last week, David, did it jump to over 60?
Yeah.
And then came back down. And for reference, the global financial crisis of 2008, I think it was 83 or 85, which is practically like doomsday, I think, from a lot of financial perspectives. But when you look at volatility in equities markets, David, that's a pretty big jump. Are crypto markets volatile on a percentage basis because relative to those markets, they don't have the level of volatility, level of liquidity that those markets do? I mean, we look at Bitcoin at 1 point something trillion. We look at the overall crypto market as, I'm going to call it 2.5, 3 trillion, whatever it may be at this current moment in time. The FX market on a day-to-day basis is double-digit trillions every single day. So is that part of the volatility, David?
I think a lot of it is the low liquidity, the times that the trading's occurring, like a Sunday during the day in the US. Also, you just have a lot of leverage still in the market. So as you trigger certain ranges, a lot of the leverage gets liquidated. And I think as the markets get more mature, these liquidations won't have such a price move, but you're seeing these liquidations, and when they get triggered, hundreds of millions of dollars you have forced selling, and it sort of drives things further. So I think it's a matter of maturity and the time of when it's happening that's really driving it. And so those are things that I think over time will get resolved.
Yeah.
And so there's an article today in CoinDesk about how Bitcoin mining profitability fell to like historic lows, but US listed miners, their percentage has grown to I think like 26% or so. How does that factor in, if at all?
Well, I think it's more depending on what state you're in. It depends on how expensive it is the electricity to do the mining. But we saw a lot of miners selling before, so they may just feel that at these prices it doesn't make sense for them to sell, and that they'll hold on, and ideally that the Bitcoin that they sold at higher prices will fund their capital. But some of the miners are now taking strategic views on holding a fair amount of Bitcoin on their balance sheet. Probably seeing how successful Michael Saylor and MicroStrategy's been, and deciding that they want to allocate some of that to longer term holds. And so maybe they're raising debt or some equity to afford to be able to do that.
So I guess what I'm wondering with that is it, as you're saying, is it intended to be a long-term hold, do you think? Or could that be another source? Like, as you were talking about earlier about, volume of potential transactions, right? Like Bitcoin on the move that may be deployed later that could be having an effect on price, this pent up.
Yeah, I don't think in this moment that's what the selling is related to, but there's definitely times when the miners are selling a lot that you feel some of the price pressure, and it's sort of like a bit of an overhang. I think, look, you have the U.S. government may be selling some Bitcoin. They've moved some into their, into different wallets. The Mt. Gox, in totality, Mt. Gox could be 9 billion worth of Bitcoin. Clearly, that's not all being sold at once, but it takes time to sort of work through the demand for these things, and I think that's what's in play.
Could I add one thing to that, David? And I think what gets lost in the market conversations about the miners, Bitcoin mining, in particular, is a capital intensive endeavor.
Yeah.
Right. So when we see these conversations, and David, you and I and Josh have spoken about this, about Bitcoin miners selling or miner profitability is an all-time low, they don't make these decisions. These are true capital allocation decisions. How much rack space to keep up and running, how much to expend on electricity and other sources. Capital budgeting for future rack purchases is big company work. So I would argue they don't make these kind of decisions in a vacuum. It's certainly price dependent, but it's also forecast dependent. So I look at these things and think, are the capital allocations of miners forecasting as part of that exercise a higher Bitcoin price?
I mean, I'm sure they're certainly rooting for a higher Bitcoin price. Look, the analogy I like to use is sort of airlines and their hedging of fuel.
Yeah.
Like, you're going to buy contracts for fuel when the price is lower, what you perceive it to be lower, so that you have more supply later. And this is sort of the reverse. You sell a Bitcoin when you think it's going to be higher to fund your operations, and you want to hold on to it when you think it's going to be lower. But that said, also, like, we have to give them credit. Some of the miners have become more sophisticated. They have more capital. I think some of the smaller miners, if they need the capital, you just got to sell the Bitcoin.
Yeah. Mr. Tavares has joined us again. So hello, Mr. Tavares. And I want to point out that both Lee and Emma got a shout out from Josh, and we're not 10, 15 minutes into the broadcast. So welcome both.
So Josh, what on the legal side? I mean, we had a real flurry last week of things. Like, as you've had time to digest some of these rulings and some of the things that are going on, what sort of captured your attention this week?
I mean, one of the things, and this wasn't really, I for some reason thought this was last week, but maybe it was this week. Maybe the week is just going more slowly than I would have thought, is the Ripple decision. right? And thinking about the implications. Of course, we're still waiting to see whether the SEC is going to appeal. But I think one of the interesting things, and this was called out in some articles, is that the judge reminding the SEC that there were no allegations of fraud, there were no allegations of market manipulation, no misappropriation of funds, there were no victims, right? That was essentially what the judge said. And I think thinking about the implications for the secondary market, especially in light of what we've seen in certain other cases where, for example, against trading platform, or the SEC is amending to remove the references to the token. So, I mean, I think that's really where my mind has been on those sorts of topics from a legal perspective. Of course, if there's anything specific you want to talk about, please,
I've got a
like
question.
it, Ron.
So we talked about this earlier in the week, the three of us, and we talked about it at a couple of different WSBA meetings. Just to clarify, the retail sales, the judge, this is kind of a splitting the baby kind of situation. The retail sales were not, in violation of law, but the primary sales, essentially what you might look at as this stock issuance in the equities world, were. David, Josh, for a non-attorney, does this blow up the SEC's claim on other cases that even the secondary market sales are illegal, with a judge saying no, they're not?
I mean, I think for this, sorry, David, if you wanted to jump in.
No, I was waiting to hear what you had to say.
So I think we have to remember, this is a district court judge. None of this is binding, even in the same district. And certainly it's influential. It appears to be influencing Judge Jackson in the Binance case, right? The Ripple holding. But I think even in the Ripple case, there was that specific footnote that said that she wasn't, if I remember correctly, that said that Judge Torres wasn't addressing secondary sales. So it's sort of one of these things where logically, how do you not have it apply? Like how would the logic work so that it would make secondary sales, be sales of securities, right? If you follow Judge Torres's logic. And yet she said, don't follow the logic that far. I'm just looking at the case in front of me, similar to what the Binance judge has said as well.
Right.
So I guess the question is, if you're one of the exchanges that are defendants, do you look at the Binance case? Do you look at the Ripple case? And do you supplement your pleadings, or, and say, look, we now have two different judges who've ruled in these two different matters, and, we think their viewpoints are persuasive, and we urge the court to adopt them.
Does that happen a lot, David?
Yeah, I mean, I think in the Ripple case, when there were some favorable rulings in some of the other cases, that they wrote a letter to the judge, highlighting the ruling and why it was applicable in their case. So I would suspect that the other exchanges are thinking about that and thinking how best to position those arguments. I mean, I think anybody, if there are positive arguments to be made in your case that another district court judge, even if it's not binding, has decided, I think it's certainly worth making the judge in your case aware of it, and then applying those facts as favorably as possible to your scenario. It's really interesting. We're in a fascinating place. There's some really interesting moves that are going to have to play out. And this potential appeal to the Second Circuit really could go in a couple of ways, because I think generally people agree that if the Second Circuit were to rule sort of favorably for Ripple, that an appeal to the Supreme Court wouldn't really go to a group that's been supportive of regulators and their approach when it's not codified.
Can I ask one more question, Josh, about this?
Sure.
Again, I'm the non-attorney here, and for all of those in the audience, if you are attorneys and you want to chime in, or you're not an attorney, just please put it in the chat. But one of the things that stood out for me was the judge in the Ripple judgment noted, totally paraphrasing, and don't do this type of thing again specifically. I'm assuming that is pretty boilerplate language, and I'm assuming that is related to primary sales. How should that be read, Josh and David?
Your
No
turn,
one wants to
Josh.
know.
Ladies first.
I mean, can you rephrase the question?
What did the judge tell Ripple not to do in the future? I guess is the best way.
I guess it's hard for me in a way to say, because are they going to be doing those initial sales again, like to institutions in that way? I mean, I think that's a challenging question. I mean, is there anything to be done again if they're not doing another initial set of sales? I mean, we've already seen, as part, if my recollection holds, as part of the initial decision, that even, like, things relating to employee compensation or sales by principals, that they fell outside of that initial category of institutional. So yeah, I mean, it would seem that, I mean, don't do it again would seem to be, don't have large sales to of a non-developed token.
I want to point out for the audience that I know David and I know Josh long enough to know that when she asked you to reword the question, it was a dumb question to begin with.
No,
So
it was all written out in my mind.
Oh,
Go
goodness.
into gear.
Yeah. No, look, I think that either they're going to pursue an exemption to the securities laws to sell tokens to institutions, or they're going to sell them in jurisdictions that this ruling won't apply to. And I think that the team will probably, dissect the decision and come up with a strategy for how they want to disseminate the tokens.
So you mean like a Reg D kind of thing, right, David?
Well, it could be Reg S, if it's overseas. I mean, I think that they're probably weighing their options. And again, I have not been in contact with them, so I'm not saying this from a point of primary knowledge. But my sense is there's an assessment going on how to implement a strategy so that, different banks are using their Ripple, using XRP or using the ecosystem to do interbank transfers.
Yeah.
Yeah.
George is
It's complicated, all joking aside, it is complicated. And so I think it's probably taking a while to get sorted out.
Yeah.
By the way, earlier you may have heard some noise on my end. It was because I was trying to go on X to find a particular tweet or set of tweets that I wanted to share for a particular topic, just to plug them, because I thought it was a great post stream, whatever we are calling that set of posts. And I instead got a lot of noise in the background. But the posts were by Professor Tanya M. Evans, and it related to some of the presentations at Crypto for Harris. So, I mean, this was a big week for that. I highly recommend Professor Evans's post. She highlights some really great entrepreneurs in the tweets. I guess a question for you guys, does this change anything? I mean, when we've looked at some of the advisors that Vice President Harris has selected for crypto, some people are saying, okay, well, they've had relatively, shall I say, less than sanguine approaches with respect to crypto historically. Will there be a change? What do you think the impact, if any, of the Crypto for Harris town hall this week has been?
I can't believe we're actually having conversations about fundraising and PACs that are crypto PACs working for specific candidates, given that a year and a half ago, it was poison to all politicians. And I generally tend to be an optimist, Josh, but when it comes to politics, I'm really, really cynical. I think one side picked up on crypto because they needed, percentage points of votes and saw a lot of money. And the minute that happened, the other side said, oh, no, we're pro-crypto too. I'm just going to say it. David, Josh, tell me if I'm wrong. I don't buy it. I think if the current vice president becomes president, I'm not advocating one way or the other. I think, I won't call it choke point 2.0, but there's enough there was enough negative perspective of crypto in that party that I don't think things get better. I want to be wrong, and I'm not wagering David, but someone tell me.
Look, I was on the plane originally when it was broadcast, so I was, hearing and reading different takes. It just, in the totality of things, considering how challenging this administration has been on crypto policies, and choke point 2.0, I think it would really take some very significant position changes, and not just sort of platforms, but I think personnel changes and really significant moves, I think, to gain the trust of the community. My sense is that, you had all these people raise their hands who's been impacted by trying to get a bank account. Um, and some of the people who may be part of the, new administration have very distinctive views on crypto, and not necessarily supportive of the industry. So, we don't know what Vice President Harris actually thinks, because she didn't participate in that call. And she hasn't said in particular what her view is. And frankly, look, I think she has to work on her own economic policies, and try and differentiate herself from President Biden. But ultimately, at some point, maybe, maybe it's a CoinDesk interview, maybe it's, a New York Times interview. Somewhere at some point, there has to be something tangible that we can look to and say, this is her policy, or this is her leanings. Right now, we're just really having surrogates who are just sort of dealing with it because I think they feel compelled to deal with it.
By the way, David, I didn't walk away because you started talking. I needed a water refill because I'm losing my voice. I agree with you, David, but the other side of it, it's 10 weeks to the election. The window for having policies clearly elaborated to the American public is starting to close.
Well, look, I will say this. In all fairness, this turn of events with candidates happened very quickly. And so I'm assuming this wasn't going on behind the scenes for months, but in all fairness to Vice President Harris, it is, it does take some time to get all this together. And as much as we all love our space, we are in a little bit of our own echo chamber. So I know that this isn't maybe the top 3 issues, but I really do believe that if they don't, if she doesn't take a more firm position, I think people who are voting on this issue, or people who are severely impacted on this issue, are really going to form views about, with the candidates that have stated their positions.
Yeah. What do you guys, were you surprised at all, to the extent that this is accurate, my understanding, when Elon Musk interviewed former President Trump recently for, I believe, a couple of hours?
She went there, David.
Yeah, that there appeared, at least to my knowledge, to be no mention of crypto. Now, we also have heard, I believe this week, that former President Trump holds, I think, about $1 million of ETH, they said, and some NFTs. But, were you surprised that crypto was not a talking point within that 2 hours? Or do you think, Nashville was enough?
I mean, I was not surprised. I did not expect it. I suspect, I think there are debates coming up. I think it's September 10th is the first debate. Someone in the audience, or David or Josh, correct me if I'm wrong, there might be another one. I would be shocked if it even comes up in the debates.
Yeah.
I just think from a policy perspective, and again, I'm not a political analyst, shout out to Adam Goldberg and Dina Ellis. We should get them here, although they do our policy updates on every 2 weeks. I think they've got so much work to do to elaborate on their broader positions that crypto is going to be something they're not going to spend a lot of time on stages talking about. I think the campaigns will come out with their proposals at some point.
Well, look, I think RFK and Trump really stated their positions, and I don't know that they need to double down on it. I think they were very clear about where they are, and can point people to those. And again, I'm really trying to, keep an open mind. So we have to give Vice President Harris some time.
Of course.
I do hope that, some publication, asks her meaningful questions and sort of, gives us some real understanding of what her thinking is. And maybe, look, in fairness, it may still be developing. Like, this just might not have been on her radar. It wasn't in her sort of portfolio of obligations. And, it may just not have been on her radar. So,
and David, what happened
to keep open-minded?
What, the other interesting takeaway from that is I don't think anyone's doing, do you remember the town halls candidates used to do?
Yeah.
Granted, they were vetted questions and it was an audience, but you'd have citizens stand up in a town hall saying, what do you think of X? What do you think of, not X Twitter, X topic? Yeah. What do you could have imagined someone saying, what are your thoughts on crypto? But that's not going to happen this election cycle.
Well, I think, all joking aside, it would be nice if Vice President Harris took some questions, regardless of whether it was crypto or not. But all joking aside, I think just the nature of this campaign is just going to be different that way. Yeah. And I don't think we're going to get these kind of freewheeling discussions. It feels like everything is going to be really, really sort of monitored and really, catered in a certain way. I don't think you're going to get a lot of, those type of interactions. What do you think, Josh?
Yeah.
So, I mean, I don't know any more than you guys do, but I do think that as an industry, we should be prepared that whichever way it goes, we haven't alienated a candidate.
Yeah.
And we're prepared for how to approach that new administration, because it will be a new administration in either event. And that goes for everything from education, right? Because every time, it's an opportunity, as David and Ron, you both said, we don't know to what extent Kamala Harris has been focused on this issue, or whether it was like, number 973 on a list of 1,000 things, right? So I think, thinking about not just educating, whoever ultimately may win, right? But also thinking about the approach to regulators in the event that there are new folks at the top. So I think kind of planning a two-prong strategy for whichever, or even three-prong. I mean, there's more than two candidates, and certainly all of the three that I'm thinking of right now have made statements in one form or another that somehow relate to crypto. I think one thing Greg Murphy has in the chat here, he says, maybe the SEC hits buyers of Ripple in both types of sales, just harkening back to our prior conversation, with what they're hitting crypto VCs with, statutory underwriter. So that's something that's been reported in a few publications, that there have been investigations into certain VCs. Certainly, we can't confirm or deny or anything like that. But I will say, if anyone is interested, for one time I will plug something I did, which is about a year ago, I did an interview with Michael Del Castillo when he was still at Forbes, like a podcast on this topic. So if you look up, it has to do with crypto VCs and what the SEC may think. Not that I'm happy that that's happening, but just if somebody's interested in that.
But Josh, for the audience and for a fossil like me, hitting the buyers, including the retail buyers of Ripple, how would that work? Like I absolutely get Greg's point, and Greg, thank you so much. Shout out to Greg Murphy, WSBA member. But how do you hit non-institutional sales?
So when I was addressing that, I was really looking at the crypto VCs part,
okay,
if I'm being honest.
Yeah.
But yeah, I mean, I certainly in the institutional sales,
sure,
depending on the nature of those, I could.
Look, I think they may be also looking at, sales to VCs at a discount,
right?
With the immediate unlocking or very short periods of unlocking, and looking at it from that perspective.
Yeah, David, I want to point out, I think Josh froze, and she's the only person. She's the only person I know who freezes and actually looks normal. Whenever you or I freeze, we are in the weirdest poses. But Josh, I'm sorry we can't hear you. I think you froze. But Greg, great topic. And George had posted some topics. I did not see the congressional discussion on regulating stablecoins. David, did you?
You know what? I mean, I've heard, I heard some chatter about it. I did not have a chance to really dive
Yeah.
into that. It's something we certainly can dive into. But, I think one of the things that's really, going back to our politics discussion, I think ultimately where the money from the PACs are sent and spent is ultimately going to be the voice of where the community lands.
Yeah.
I think there's to strike a balance of advocating for the position for the community, supporting candidates who are going to be supportive of the positions we want them to take, but also not burning the bridge in the event that a candidate wins that isn't going to be supportive.
Yeah, David, I mean, to that point, Wall Street Blockchain Alliance and the work you and I have done and so many other members, it's never really been about pick a candidate, be political, one candidate is bad and one candidate is good. We've always approached it with our members from the perspective of look, whoever is in power, you have to work with the government. Whoever is the chair of a particular regulatory body, you've got to work with that regulatory body. We can make claims about, hey, a little clarity would be nice, and there have been challenges there. But to your point, um, this industry is looking for the ability to work with whatever administration is available because we think there's long-term economic benefit. And David, you and I have joked, none of us are crypto anarchists. We're not trying to burn down the Fed or get rid of the dollar as a reserve currency. It's about how do we make this work? And I think that's been the underlying theme of the conversation for a long time.
Yeah, and I think the problem has been is that there's been so much money spent,
Yes.
In court hearings, with lawyers, that it's really stifled some of the innovation in the U.S. And I think that is where the pent up sort of, energy and sort of focus has been. And so I think Vice President Harris, because she's been part of this administration, and again, I don't think we can ascribe what this administration's done to crypto to her.
Agreed.
But at the same time, if there's no sense that her administration is going to be much different than this one, then it's very hard to see people getting excited in the crypto community about her, winning the election. So I think that's really where it comes from.
Yeah.
And I think the tight time frame does work against her on this too.
Yeah, no, fully agree. We'll give her the benefit of the doubt as well. But it is an interesting time nonetheless. David, I think we're approaching wrap up time. I think we lost Josh. The vineyard has lost power apparently, but I will be away next week, David, but I will be in text, available by text, and I expect you and I will be sharing data. But what's coming up for you?
I think now we may really settle into that quiet part of August that we were expecting, and now I think hopefully. This is really the time a lot of people here in the U.S. are taking vacations. As your yacht is, getting cleaned up, having final checks before you board on your adventure.
That's right.
I'm looking forward to really just some quality family time, and then catching up on some reading, and then I have a couple of really interesting projects I'm working on, so we'll working on that. But I'll be very interested to see where Bitcoin and Ether stand. Like, we're sort of been in this trading range, 57 to 70,000. We're on the lower end of it. We pushed below 57 yesterday, and so I'm just going to really kind of watch and see if we can also tell if we see some real selling from either the Mt. Gox recipients, if the U.S. government is selling, or another one of these bankruptcies selling. So I think those are the main things I'm going to focus on.
Same here, David.
I'm super excited football is back, even if it's preseason. And, so I'll definitely be watching some of that. So what are you going to be focusing on, Ron?
I will not be focusing on football, but I did think of you when I did see it on screen, so I'm sure you'll enjoy the preseason. I likewise, again, I'm going to be on a long-awaited vacation with my wife. I will be reading and following up on the news. I'm hoping, David, there's not any drastic moves in the market where I have to like pull out the iPad and type up some notes to the team and to the members as well. But keeping it really quiet. I think I agree with you. We're kind of in a quiet season. I'm reading a fascinating book. It's a couple of years old by George Gilder called Life After Capitalism. I'm only about a third of the way through it, but it really speaks to we're becoming a fully knowledge-based economy. And for me, it's what does that mean for crypto? What does that mean for blockchain? It'll be interesting to see where that goes. So I'll give you the thumbnail book review as well. But David, last thing I'm going to announce for everyone in the audience, again, thank you all for joining us. If we missed any questions, email David or Josh or I, info@wsba.co. October 24th, 2024 in Midtown Manhattan. The one and only David Brill and I and Josh and a bunch of other members will be speaking at the WSBA's Crypto and Blockchain Summit in Midtown Manhattan, right next to Grand Central. There are a block of tickets available for the public. If you'd love to join us, go to the website, wsba.co. There's a link for you to register. You can meet David and Josh and I and a bunch of other really smart people in person. I'm not including myself in the smart people. I spend time with smart people, but hopefully you can join us. It's going to be a great time. I want to say it's a long way away. It's not. So get in for the early bird if you can. Lots of great talents, lots of great comments, and a couple of book signings that are happening, David, during the event. And for everyone in the audience, I still live in dread of the steak dinner I will probably owe David by the end of the year. So, David, I'm going to leave it there. I got to start packing. Thank you, David. Always good to see you, brother. Thank you for everyone in the audience who joined us, and we will leave it there, and we will see you next time.